It's Friday, September 12th. I'm Brian Walsh, and welcome to This Week in Impact, where I talk with ImpactAlpha journalists and editors about some of the most interesting impact investing stories that crossed our newsroom. This week, I'm joined by editor David Bank. We'll discuss, as federal funding for climate dries up, how the newly launched All Aboard Coalition is looking to mobilize co-investments in climate tech. Plus, how fashion brands are stepping into the aid gap to back regenerative cotton in Peru's Amazon region. And finally, we'll discuss the potential of DePINs, that's decentralized physical infrastructure networks, and the promise they hold for how communities might access critical services, from the internet to energy to environmental data, all at lower costs. That's all coming up on This Week in Impact. Hi, David. It's been a tumultuous week. How are you holding up?
Yeah, Brian, things were crazy and now they get crazier. Violence is really a bad warning sign.
Yeah, on that I think we can all agree. All right, well, first up, move fast and scale things. That could be the motto for the newly launched All Aboard Coalition, which is looking to mobilize $300 million or more for co-investments into climate tech startups. As our Amy Cortese reported this week, this collaborative of climate tech VCs aims to make sure the companies they back have access to the capital they need to make that tricky leap from promising technology to commercial success. David, tell us about who's behind this effort and what are they hoping to accomplish?
Well, it's one of these examples of, every action has a reaction. So the, Trump administration has been, let's say, fairly hostile to climate action and climate funding. And a group of private investors have gotten together. So it's kind of a novel concept. Chris Anderson, who's been behind the TED Talks and the TED Conference for the last number of years, pulled together about a dozen of the leading climate tech venture capital firms. And they formed this coalition, as you said, to enable co-investments in the deals they're already investing in. So it's a sort of a sidecar fund that can be tapped to finance commercial deployments of some of the promising climate tech investments. So you've got folks like Breakthrough Energy and Vinod Khosla's Khosla Ventures, Congruent Partners, Energy Impact Partners, Spring Lane Capital. And if three of them get together and fund a company, then this All Aboard Coalition will come in behind them and provide additional capital to sort of build plants, what are called first of a kind deployments.
And that's because the other types of funding available for these types of investments was not available?
Well, some of it is a pullback. The Department of Energy Loans Program Office, had been doing some of this kind of lending earlier, and there were other government programs and incentives. But this first of a kind funding actually has been a problem and a bottleneck for some time. There's been some, funds raised against it. But essentially, you've got, kind of very capital intensive hardware type things, building facilities and factories. That's kind of beyond where venture capitalists like to play. Yet these companies are not yet, revenue positive or profitable, and banks don't really like to lend either. So you've got this kind of, chicken and egg problem where you've got to get big, but you don't have any ability to access the capital to get big enough to get to scale to then make your product pay off. So it's partly occasioned, by the downturn in federal support, and it's partly just a novel solution, sort of collaborative solution to a problem that existed even before that.
Do we have any line of sight into who some of the LPs or limited partners are into the All Aboard Coalition? Is it the LPs into the existing funds themselves or the other sources of capital?
I think it probably does draw from that. We don't know yet, and it is interesting. These folks got quite a bit of play out of this because there were some big bold-faced names involved in some of the venture funds, but they haven't announced the LPs. They're having kind of a demo day out here in Half Moon Bay at the end of the month, and I think we'll make the first deployments of capital. So they claim it'll come together quite fast, that the $300 million is within range, and that they could go on and raise additional funds after that.
And VCs can sometimes collaborate and they co-invest and they do deals repeatedly over the years alongside each other. But this is another level of collaboration. And what are some of the challenges when investors kind of get together for these kind of collaborative funding mechanisms?
Well, as you say, VCs, compete to get into deals in, hot tech deals. It's hard to get an allocation. I think that what they're banking on in this climate context is that VCs have a shared interest in really seeing these promising solutions. And we're talking, gigaton scale carbon reduction type solutions, and in very sometimes, hard to scale kind of sectors. And I think folks actually have an ambition to make progress. There's, huge opportunities, huge technology advances, obviously climate urgency. So they're putting aside their competitive chops and working together.
Right. These are that kind of broad swath of technologies that still carry that risk and price premium. So everything from zero carbon geothermal and nuclear energy to long duration energy storage, carbon capture, and marine decarbonization. So these are still nascent kind of types of technologies that haven't yet gotten to the scale that is necessary to make them fully commercial.
Yeah, this green premium is the key thing, and the commercialization, as you say, is what brings down the cost curves as you scale up. And we've seen that in, obviously, solar is the canonical example, where the more you build, the cheaper it gets, and you eventually become much more competitive, or even, obviously advantageous against other alternatives, fossil fuel alternatives. But there's a kind of a learning curve and a growth curve that has to happen first.
All right, well, that's super interesting. You can read Amy's story on the All Aboard Coalition on impactalpha.com. There's also a link in our show notes. Later on, we'll discuss a new decentralized and community owned model for digital infrastructure. But for now, we'll take a quick break, and when we come back, how fashion brands are stepping up to ensure the sustainability of their supply chains in the Amazon amidst U.S. government funding cuts.
Sign up for Impact Alpha's free weekly newsletter, Impact Alpha Open, a crisp, expert-curated investment briefing that lifts up people, data, tools, trends, and job opportunities to help you stay ahead of the curve. Find the alpha in Impact. Visit impactalpha.com/open to learn more.
We're in the middle of New York Fashion Week, and this week, our Eric Stein had a sustainable fashion article about how some brands are stepping into the aid gap to back regenerative cotton in Peru's Amazon region. David, after the USAID pulled out of sustainable cotton projects in the Amazon region of Peru, tell us about how a brand stepped in.
Yeah, this is another example of action and reaction. USAID had a program with Canada called the Amazon Business Alliance, and one of the companies that they were working with for sort of regenerative and sustainable agriculture in the Amazon region was this company called Cotton Nation, and it's a sort of a buyers collective that guarantees the offtake for local cotton farmers so that they can get a premium price for their organic and high quality cotton, and that raises the growing practices and other things. And when USAID dropped out, with the funding cuts of recent months, Lululemon, the sportswear company, stepped in, and they're both an off-taker, a guaranteed buyer of the cotton, and they also provide kind of grant funding for this Cotton Nation. So it's a kind of example of one door closes, another door opens.
So Lululemon isn't getting into the aid game out of the goodness of their own heart. They're doing this because they want to have a dependable, reliable supply chain of high quality cotton for their products, and it also helps align with their brand. So tell us a little bit more about Cotton Nation and their model.
Yeah, I mean, a lot of brands are under pressure, either from, stakeholders of various sorts, regulators. There's European sort of disclosure and transparency rules they have to meet about their supply chains. So Cotton Nation is kind of I think of it as a kind of a Neiman Ranch, if folks know that, for organic meats. They are kind of the intermediary and help the farmers raise their game, help them get the kind of certifications they need, and then help them get to market and get these premium priced kind of offtake contracts. And again, not just from Lululemon, but Lacoste and Patagonia and others are customers. And in essence, they guarantee farmers premium pricing for their entire crop. So there's a sort of built-in incentive for the farmers to take up these practices sort of across their whole operation and know that they're going to be able to get paid for it.
So it's a mechanism for big brands to support smallholder farmers.
Yeah, and it's interesting. It's a part of Peru and part of the Amazon that had been a big cotton farming region. Kind of the bottom fell out of that market in the 80s and it went to other markets. And now it's coming back in this kind of high quality, organic, sort of premium pricing kind of way. And that's a interesting kind of birth and rebirth kind of model for Peru's Amazon area.
So regenerative practices and sustainable cotton, it's so hot right now.
Actually, it is, Brian. Lululemon is also part of another initiative called the Fashion Climate Fund, and this is targeting a $250 million raise, essentially, I think, to lend money to the suppliers to these big brands so that they can up their game with better safety equipment for workers and more sustainable practices. And so the brands contribute to the fund that lends the money to the suppliers that the brands can then buy from, and it creates kind of a nice virtuous circle of uplift in the whole supply chain. It's kind of like what Closed Loop Partners did with plastic waste recycling, and they got folks like Procter & Gamble, Walmart, and Unilever involved. So get the big brands, the big buyers to help fund the improvements that then make everybody's supply chain more sustainable.
All right, well, you can read Eric's story on sustainable fashion brands stepping up on impactalpha.com. There's also a link in our show notes. But for now, we'll take one more quick break. When we come back, we'll discuss DePINs, decentralized physical infrastructure networks. Finally this week, DePINs. That's the acronym for Decentralized Physical Infrastructure Networks. We had a guest post this week from Renee Pinto de Silva Barton. She's the manager for impact research at the Crypto Council for Innovation, which is backed by the Kellogg Foundation, which is also a backer of ImpactAlpha. In the guest piece, De Silva Barton made the case for how DePINs represent a chance for impact investors to fund models that not only close the gap in access to critical services, but also create affordable and resilient systems that communities themselves can sustain. So, David, I'll admit that DePIN is a new acronym for me, but the case for them sounds really compelling. So, at a high level, tell me about how they work and the potential problems they might solve.
Yeah, I like it too. It kind of puts a wrapper around a bunch of things that have been kind of coming up organically around the country. And I think folks might know, about sort of mesh networks for internet access, where your Wi-Fi, sort of relays stuff to the neighbors and the neighbor and the neighbor. That's kind of come up in various places as a way to kind of increase the resiliency of internet services. There's something called Althea that takes that to a higher level. There's a whole protocol around it, and many communities are building internet access, internet service providers from kind of the piece parts that different residents have put up, whether it's a satellite dish or a transmitter or a receiver of some sort, and kind of knitting together these networks for internet access. And you can do it, it turns out, for costs from about a third to a half of what commercial internet service providers are charging. But this DePIN model could go even further. So you think about kind of distributed weather sensors. I know when the fires were raging out here, there's something called Purple Air and a number of other outfits that aggregate folks' own air sensor data and provide maps of where the air quality is good and bad and that sort of thing. And you can think about that as a way to monitor rainfall for farmers who might get paid off on a kind of parametric insurance scheme for whether there's enough water to raise their crops in Africa. So all these kinds of things where there is infrastructure in place and it can be knit together as a kind of Internet of Things. And then I think crucially now it can be actually compensated and sort of accounted for on a kind of distributed blockchain basis. So you get credit and compensation for your share of the network. That makes it actually a kind of business, and you can now, have investors coming in backing these decentralized networks, and every every resident who pitches in with their piece of it gets a little piece of the action as well.
Right. So it makes it more affordable for the end users, but the investors benefit because it's a kind of reduced CapEx requirements up front.
Absolutely. I mean, there's all kinds of capacity laying around. I think people know, they may have known, the SETI, the Search for Extraterrestrial Intelligence, and folks they'd farm out some of the data that they had pulled down from these radio telescopes, and people with their spare PC cycles would kind of analyze it to see whether there were any signals from aliens. But these kinds of things happen all across the environment now. As all kinds of people have built things for their own use, and there's lots of spare capacity in those. So why not knit it all together and make it into a true infrastructure that the community can take advantage of?
And I imagine this, benefits from network effects, but network effects are kind of famously very difficult to get to critical mass. So how should we think about how DePINs could get to greater scale?
Well, probably, that it needs these kind of protocols. Althea is an example of that, so that there's sort of common standard that helps knit things together and just at a tech basis makes it more feasible. And then, as I said, these blockchain and kind of distributed payment and compensation systems are coming into to play. People are thinking, AI, for example, there's these huge data centers that are sucking down all the energy and powering AI, but there's also lots of spare cycles in other places and ways of kind of decentralizing AI processing and AI power. So, probably again, some kinds of, guarantees and catalytic kind of de-risking mechanisms in the early days. And then once the networks are up, there's probably much more operational kinds of investments that could be had, just like in any kind of project, just now, decentralized as opposed to one big player, taking all the network effects for themselves.
So, David, what's the opportunity here with these decentralized physical infrastructure networks?
Well, just take one. There's something like 24 million Americans that still lack fixed broadband access, and in many places, we know Indian reservations in particular has been a big push. It's a significant barrier, but even in a place like New York, something like a third of the folks lack affordable high-speed internet. So, if these kinds of community decentralized networks can bring it faster, cheaper, better, and share some of both the wealth but also the access, I think there's going to be a model for getting those things done.
All right, super interesting idea, and be interesting to see how this concept emerges and how investors take up the call here. But you can read the guest post from the Crypto Council for Innovation on DePINs on ImpactAlpha.com. There's also a link in our show notes. But for now, that's going to do it for this episode of This Week in Impact. Thank you, David.
Thank you, Brian. It's always a pleasure.
Likewise. And thank you all for listening. This Week in Impact is a production of Impact Alpha and part of the Impact Alpha podcast network. Smart conversations by and for impact investing professionals. For exclusive stories and insights about the world of impact investing and sustainable finance, join thousands of other agents of impact by subscribing. Just go to impactalpha.com/subscribe for full access. Thanks, as always, to our producer extraordinaire, Isaac Silk. For David Bank, I'm Brian Walsh, Managing Director of the impact advisory firm Human Nature. We'll see you next week for more Impact.